But ultimately, we've seen it over and over again in both fiat assets and also really in the crypto world that fractional reserve banking is dead and it does not work. And so I think that the more that people's eyes are open to that, the more that this Bitcoin future that we, all three of us here, want, and who many in the community do want as well, is going to come to fruition. Because at the end of the day, I think that people in like the current Keynesian markets and so forth think that you need to stimulate the economy by having some sort of debt society, and that's just simply not the case. They've just never looked at it from another perspective of how the world can be without this, continuous credit cycles that are boom and bust that we're constantly going through. And I think it'll be an interesting experiment for people going forward.
How does hyper Bitcoinization happen? In my mind, that happens if I can go and buy the goods and services that I want in my local community with Bitcoin. I'm not asking for permission. I'm just going to go out and do that. And so I think for more Bitcoiners, it's not this idea that I'm just going to stack, hodl, and never do anything else. Go out and go buy businesses, start businesses, do things, and accept Bitcoin and see the ability for that to flourish.
What's up, Sats fans? Welcome to Swan Signal. We got a great show for you guys lined up today.
If you care about your financial future, you need to check out a couple of our offerings, including Swan IRA and Swan Private. Swan Private is our white glove concierge service where you get a trusted partner on your Bitcoin journey. We offer all kinds of education and research projects, as well as exclusive events to our Swan Private customers. Check it out today at swan.com/private. Also, Swan IRA. Swan IRA is the best way to gain exposure to real Bitcoin in a tax-advantaged account, like a traditional IRA, a Roth IRA, or rolling over your 401k. So if that interests you, check it out at swan.com/IRA today.
Two excellent guests, two financial advisors, actually. One is Morgen Rochard, who's the founder of Origin Wealth Advisors, as well as the author of the Personal Finance Quick Start Guide. And then we have Isaiah Douglas, who is a partner at Vincier Wealth Management. So welcome to Swan Signal to you both.
Thanks for
It's great to
having
have you.
Absolutely. Good to be here.
Yeah, so I love talking to financial advisors because I don't think people in the Bitcoin space fully appreciate how important financial advisors are today and how much wealth they manage and advise. So there are approximately 29,000 independent registered investment advisors. They're advising over $10.6 trillion for 4.5 million client accounts. And so the opportunity here to push Bitcoin adoption by educating financial advisors is tremendous. If you educate one financial advisor, then they're spreading the Bitcoin knowledge to all of their clients. Then a percentage of their clients, they get orange pilled, and then they're talking to all their friends. So it's this one-to-many orange pill, and that's why I'm so passionate about talking to financial advisors. And you both are, I would say, at the vanguard and when it comes to financial advisors and your understanding of Bitcoin. And so it's just great to have you guys here. So let's start like more big picture, because I imagine this last year or so for financial advisors have been a little bit different than the last even 10 years, 20 years, 30 years. I mean, you had interest rates in steady decline really from the early 80s up until last year. And you had this typical blueprint of portfolio constructions. So I was wondering just how are you guys managing this kind of changing investment environment and how are you guys advising your clients through this? Let's throw it to Morgan and then we'll get Isaiah.
Yeah, I think that's a great question. I often think back to a conversation I had in March of 2020. So at the height of the COVID response where the markets were crashing, we had this meeting with an investment firm, and they were telling me why all of my clients should own the long bond in their portfolio. And I remember thinking to myself, I had that meeting and I'm like, I had thrown out a bunch of reasons why that was, ridiculous. And actually, I didn't even bring up Bitcoin at the time. But I got off that call just thinking like, wow, they're just really out of touch with reality and what's happening. And it's obviously not what we did for clients. We did not recommend that people own the long bond. I think that now more than ever, Bitcoin seems like it should be a part of clients' portfolios, especially given what's been going on with interest rates, what's happening in the banking sector. Just having even a small percentage allocated to something where you can opt out should you need to opt out. It can act as a really nice insurance policy for clients. So that's like one way to start the conversation and approach it. But really, and this is something we've been discussing in our Bitcoin for Advisors study group, is like, what's the real rule of thumb, and how much should clients actually be allocated? It's a little bit more difficult than like, hey, rule of thumb, your age minus 100 minus your age, and that's how much you should have in stocks.
Yeah.
For some people, yeah, that might make sense. Your age minus, or 100 minus your age, that's how much you should have in Bitcoin. For other people, that might not make any sense. And then for others, right, it's really a combination of risk tolerance, time horizon, understanding of the technology, especially emphasis on understanding of the technology is I think paramount, because you need to be able to hold during really rough times and also be steady during really good times, right? Which is hard for people as well, to be able to hold not only through bear market cycles, but also be able to hold through bull market cycles. And so we're just seeing in our client base such a range of what people can and can't do. And unfortunately, we can't come up with a rule of thumb. But in my practice, I mean, we have anywhere from 1 to 100% in Bitcoin, which is kind of crazy. And that's just not,
Wow.
given that, like, the median age of my practice is 42, you wouldn't think that we'd have such a wide variety of what people do hold. It should be closer to some sort of stock bond rule, but it's simply not.
Yeah.
Hmm.
I would
What about
say
you,
the
Isaiah?
biggest thing that I've learned talking with Bitcoin and clients is the point where they decided to make the decision. Right, you can talk to them for a long time. You can talk to them when Bitcoin's trading in the teens, right, and then when they pull the trigger and buy it in the 50s, right, like they might have a very different experience. And I think Morgan hit on it, right. For me, the big thing that's come up is clients can't borrow the conviction of the advisor, right? Like they need to be educated and they need to be informed. And I think some clients will say they get it and then they go through the experience and it's really hard for them. And they're like, well, I don't really understand why I own this. And now it's just like gone down a lot in value. And the other stuff that I own hasn't. So, like, WTF, like what's going on here? And there's others like, hey, I get it. I know this is an asset that is here for a long duration. I think that's when Morgan and I and others in kind of the Bitcoin for Advisors community talk about it. I always think, Bitcoin is the best tool to save for long duration goals. Like if I'm saving for something over a lot of years, Bitcoin is perfect for that. So one of the things that we've talked about a lot with clients is those with student loans. So there's this idea that, if when they turn back on, if they don't forgive them all, right? But if they actually do turn back on, for a lot of people that go for forgiveness, because I work a lot with veterinarians and dentists specifically, but they have 20 or 25 years they're going to pay back loans, and at the end there's this big tax bomb that then is forgiven. To me, there is no greater asset to save for that 20 or 25-year time horizon on this potential tax burden than Bitcoin. And one of the key things that I've tried to talk to is there's a lot of companies that are trying to recruit and retain talent. It's like, what if you saved in Bitcoin and could guarantee that your doctors, their student tax bomb would be gone, and you could save less dollar terms, right, to accomplish that. And I think that's an interesting idea that I've been trying to get out there and chat with more smaller corporate entities, especially in the veterinary medicine space, to adopt. And I think that is universal to anywhere else. Like if you're trying to attract talent, like, and I know Swan, you all have a great product for thinking of, saving kind of outside like a 401k, just like a savings plan for employees. I think that's a great idea. And so it's kind of a take on that a little bit.
Yeah.
And then the other thing is, like, you look at 2022, and I was just talking to someone else about this. The 60/40 portfolio was down about 18%. You have to go back to like 1937 to see another year that was that bad. It's like Great Financial Crisis did better. And I think for a lot of people that was like mind blowing. And there was that chart that went around for a while that just kind of showed the stock bond returns and then like the bubbles. And there was this bubble in the bottom left that was like 2022. And that was just such an eyesore. And I think for a lot of traditional financial advisors that have always been some semblance of stock and bond mix, maybe we're going to add 5 or 10% of something else like an alt. It's all of a sudden getting a lot more challenging for them to figure out how to get returns. And I think it's going to continue to be very difficult for them. And so that's where I think the Bitcoin piece comes into play. And they're not going to adopt it as a huge allocation right away. As much as, Morgan and I and lots of people listening might be like, hey, they need to really get a 10, 15, 20 plus percent allocation. It's like, it's going to start very small.
Yeah, but getting off zero, I would
Yeah.
say, is better than not, right? I think this is something else that we often talk about in the little Bitcoin for Advisors community that we have. It's like, okay, well, some of our clients who are coming in, they're already Bitcoiners and they need financial advice, and that's great. And we're 100% happy to provide that. In fact, it's like one of my favorite things in the world is when a Bitcoiner comes in and they're like, look, like I've done all this stuff and I have Bitcoin, but I'm realizing that Bitcoin itself is not a financial plan. Like, what do I need to do now? And that's great. But we also have the standard client that you were talking about, you were referencing at the beginning of this, which is why people want an orange pill financial advisors, is because there are a lot of people who are just on zero, who you have to get from even zero Bitcoin to 100 sats would be better than nothing, right? And so there's a process there for sure. And to piggyback on what Isaiah was saying too about the long time horizons, I mean, I think that if we really think about just life in general, most of our time horizons are long. It's just that people sort of fail to recognize that. So, for instance, like the average retirement period for most people, right? They're retiring somewhere between age 65 and 70, and they're still going to live another 15 to 20 years, at a minimum after that. And so using something like Bitcoin in your retirement plan is still makes sense, just because like you're going through a transitional year that might happen, between age 60 and 65 when you actually retire, doesn't mean that your time horizon gets lower. And so I think there needs to be a little more education around time horizon planning, because like for the small exceptions of things like, I'm going to send my child to college in 3 years, or I'm going to go buy a house in 5 years, where those are really actual short-term time horizons. For most people, they've got these long chunks of time where they really do need to outpace inflation, and they need an asset like Bitcoin to be able to really save on a long-term basis without all of the risks that are associated with just owning the market outright.
Yeah, and just real quick, and Sam, you shouldn't have told me and Morgan to piggyback on each other, because you can ask one question and we'll just talk the whole time.
Just keep going.
But like seriously, I think about like the 5-year thing. I love the site priced in 21 priced in sats. I can't, all of a sudden I'm spacing on it, but you can look at what's a new home cost priced in Bitcoin back in like 2016 and 2020, and it's just amazing where it's like I've said it multiple times. Life is cheaper over time if I save in Bitcoin. Like, yeah, Bitcoin is great. Bitcoin is fantastic, but it's one of those things where like life just can get easier if you can save into an asset that affords you the things that you want, because it's not getting more affordable for anyone else, right? For the average individual in the United States, it is getting really difficult just to pay rent, right? Like it's out of control. And I hear that more and more. And I think from just different types of clients, we work with a younger kind of client base as well, typically, but they all want to buy houses. They want to do different things. And it's like, man, some will make really good money and it's a different conversation. But for those that still make good money, it's challenging. Like, how do I save for these things? Because you can save up and you can't never, it's perpetually out of reach. Like I'm almost there and it's out of reach.
Yeah, and if we are entering this period of higher structural inflation and currency debasement, like I think many of us think, we're going to need alternative assets that allow us to save over long periods of time, especially young people, like Isaiah was talking about. But then there's also the older individuals, like the retirees, which Morgan was talking about, who have a lot of exposure to fixed income, right? And in that environment, treasuries aren't necessarily going to be a good store of value over long periods of time. So I'm wondering how your message kind of changes for your clients based on their age when it comes to Bitcoin. Like, do you have a different message for those older retirees versus the younger people?
Can I take this real quick, Morgan? Because the first person that bought Bitcoin per recommendation, now it's a unique relationship, but he's 68 years old. He's older now, and it's been a good ride. He just bought more Bitcoin on the dip because he was like, yeah, this is something that I want to do, and it's for his girls. Like he's set for what he needs personally, and so for him, it is for his girls into the future. He wants to make sure that things are good. And we've had the conversation and it made sense for him at that time, where it was a smaller allocation that grew significantly from the price point that he bought in at. And it's not necessarily hey, we're going to rebalance this when it hits a certain percentage. It's just, this is an asset that we want to own. We're going to take self-custody because again, that's part of Bitcoin ownership. And I think that's a whole other conversation around with clients, because that's such a weird thing. Because you don't think about investments as like, so like, why would I want to own this? Like, and then trying to get that point across, especially for older clients, is tricky. But for the most part, to us, for him, it was more or less what is an asset that I can own for the next generation and for their kids. And that was Bitcoin with the conversation that we had.
Yeah, I would say also it really does depend on the retiree. So some retirees, right, they've been saving their whole lives and they're used to spending below their means. And then when they get to retirement, it's not so problematic because they're not looking to continue this outrageous lifestyle that was being funded by their income. And so for those people, holding Bitcoin's easy, right? Because your asset allocation is has that long time horizon. Like Isaiah was mentioning, he can provide for multi-generational wealth in that instance because his spending is well below his means, let's call it. For retirees where they were on a hamster wheel of income, right, and they were able to scrimp and save whatever they could, and inflation definitely didn't help in that regard. But spending doesn't help either. So I think like there are different cases of how spending can affect what people do in retirement for sure. And so what happens often with people is that if they lock themselves into higher spending, then they actually need some sort of fixed income style investment where they can get some sort of guaranteed income to pay for their lifestyle that they're unwilling to change. And so for those people, it's this weird catch 22 that I found because they need Bitcoin even more than the average person to be able to outpace inflation and to be able to keep up with their expenses and so forth. But they can't necessarily withstand the volatility of what Bitcoin would provide because in let's say in down years, right, they would have to cut their expenses in half and they're not able to do that just so that they don't run out of money. And so it's a weird balance, I would say, for those folks, for sure. So it always, I think that the number one thing that people always need to come back to, and that people hate coming back to because they like the idea of, okay, I just buy one Bitcoin and then in 50 years from now, it's worth $1 trillion and I have everything that I need. I just bought that one Bitcoin and that was my financial plan and everything's good. So I don't have to worry about all this other stuff that you're talking about, making sure that I spend less than I make. And that's just simply not the case, right? The best way for people to build wealth and to maintain wealth and to have more freedom in retirement and really throughout your entire life cycle is to make sure that you're managing your expenses such that, yeah, you're still enjoying life and you're getting the most out of life while you're here on earth, right? But that you're not using your means as a way to fulfill yourself. And so we often talk to clients who are overspending about that of like, okay, well, how can you still find meaning and purpose and more fulfillment from other activities while we're cutting expenses and so forth? Maybe the expenses that you have here are not necessarily filling the void in your life that you're claiming, and trying to figure it out that way. That way, like when they do get to a point where they need Bitcoin in their portfolio or where they have Bitcoin in their portfolio, they're not just unnecessarily spending it because they don't have any other assets to do so.
Yeah, it makes a lot of sense. I wanted to pivot a little bit. You guys both brought up the Bitcoin Advisors Network, and I was wondering if you could maybe explain a little bit more what that is, what your goals are, and why you decided to join that.
Yeah, sure. So Andy Flattery headed up the Bitcoin I guess we're the Bitcoin Financial Advisors Network. I think there's Isaiah. Correct me if I'm wrong. There's 7 of us on there now, something
Yeah,
like
we'll
that.
say that's right. 7.
Yeah,
Perfect.
7 sounds about right. Well, we started a study group a little over a year ago now, of financial advisors who are into Bitcoin. And we don't all qualify for the network, but basically what we've tried to do is put together a group of us that are fee only, meaning that we only charge for advice. We don't charge hidden fees. We don't charge based on commission, where clients can come or potential clients can come see who's on there, who's Bitcoin friendly, and then pick somebody and get the advice that they need. And the network is really it's sort of I think it's really the only one out there that is doing what we're doing. I mean, every other fee only network out there is just you can find any other advisor who knows their stuff for sure about financial planning, but they're not going to be up on everything going on in Bitcoin. There's just so few of us doing that. Our best hope is that it grows and that we have 75 members instead of 7, and that people have a huge plethora of advisors to choose from. But in the meantime, we'll start with what we have. And we do actually put out content there too. A blog post comes out every other month or so. And then the more people who join, obviously, the more content we'll probably put up there. But it's really it's a free resource for people who are looking for financial planning, who want to know who's out there, who's Bitcoin friendly, who can help them.
The one thing that I would add too that I found really interesting is there's been people that have reached out because of being in that network, and a couple students that are in last year maybe of undergrad that are wanting to go become financial planners and trying to figure out like, how do I navigate this? And one story was that he was like, yeah, I'm really into Bitcoin and I'm not so much into crypto. And I brought it up to one of the firm owners where he's like, I pretty much had an internship lined up, brought it up, and they really shot it down hard. And he pushed back and asked some questions. And I think kind of, let's say, embarrassed the senior owner of this RIA a little bit in the interview, just because he was trying to ask and engage in dialogue. He's like, yeah, I didn't get the internship, but he's trying to figure out where can he go work and have somewhere that's accepting of having those conversations. Again, to Morgan's point, there's no like hard fast rule that it's, it's one Bitcoin or it's 20% or it's 5% of an allocation. But being able to meet someone where they're at, talk about things and say, ultimately, I think Bitcoiners, we're on this journey of like, what is money, right? And asking that question and digging in really hard. And I think you can take that to any client and ask the same questions and help them understand, like, what are we here for? What are we solving for? And, how does Bitcoin play into that? And if they start to understand, I think, recent events that we may, get into a little bit more, have started to make people ask that question more. And that's great. And what they need is someone there that's willing to talk about Bitcoin and not shoo them away. And I think too many traditional advisors, and Sam, you talked about loving to talk to financial advisors. I bang my head against the wall on Twitter, and I get to the point where I'm like, I'm just going to be such an a-hole because it's so difficult, because I want people to engage with intellectual honesty in conversations, and they just won't. And they won't. And I think that's one thing where people will say Bitcoiners are toxic. It's like, no, Bitcoiners have been so open. I've learned so much from people on Twitter that I've never even met in real life, right? They've been very open, very kind, but it's because I've asked genuine questions and actually want to know the answers and want to, dig in, and versus saying this is a, XYZ and I already have the answer and I just want to try to prove a point. And, ultimately I think that's what the network will give younger advisors the ability to go to firms where they know that they can have these conversations. And then as consumers get more educated, they'll come and say, I need someone that gets this. And I think over the next decade, that network will grow a lot. I think it'll be way more than 75.
I hope you're right.
Yeah. I like talking to you guys. Let me be clear. That's the financial advisors I like to talk to. Because I actually, before I was at Swan, I was actually thinking about going into the financial advisor world, and I was talking to financial advisors, and I was already really into Bitcoin. And at that moment, I was pretty much laughed out of the room every time I brought it up, and I was really discouraged with their level of understanding at the time. Very, very minimal. Like, basically all the typical FUD points that you talk about, brought up in every conversation that I had with them. And there was only about one that I talked to that was even open to having honest dialogue about it. And that guy still emails me today, and he's really into Bitcoin now. But I was wondering where it stands today, because this was maybe 5 years ago that I was having these conversations. And I was wondering how their understanding has progressed over that time, where we're at when you talk to your colleagues in the financial advisory world. What's their holdup when it comes to allocating
I
to
would
Bitcoin?
say the biggest problem right now is that we either have a lot of no coiner advisors out there, or we have a lot of altcoiner advisors out there, and we have very few who are Bitcoiners, as seen by the network only having 7 fee-only financial planners on it. Especially given that you said there's 29,000 independent RIAs with financial advisors in it. So yeah, 7 seems pretty low relative to that number. So I mean, not to throw him under the bus, but like Rick Edelman comes to mind, for instance. He's got his Digital Advisors Council for financial planners. I'm not exactly sure what it's called. And it could have been a perfect opportunity for him to educate advisors on Bitcoin only content. But instead, what they've decided to do is not only have some Bitcoin content, which may or may not be correct based on what I've heard from people who have taken this course. They've also decided to have, stuff about Ethereum, stuff about NFTs. They're minting an NFT at their conference coming up. I mean, it's just, the list is endless. I've been in talks with them about adding more Bitcoin only content to it. And the response I've gotten is, oh, look, we added this Bitcoin only content. And it's not Bitcoin only. So it's being like, it's being heard on deaf ears, basically. It's like we're shouting, the Bitcoin maximalists are shouting, hey, this is what advisors need. They have a lot of questions about Bitcoin and what it is and how it works and how they can implement this in client portfolios. And they're just not getting the information from trusted sources. And unfortunately, voices like Isaiah and mine, we're not as popular and widely known as, let's say, somebody like Rick Edelman out there who could really kind of pass the word along about why this would be important. And so I think over time we will become that because we're sort of just loud in general and we don't seem to shut up. But but in lieu of that, right, we do need some really more powerful voices in the community coming out and saying, hey, this is what needs to be looked at. I would say the same thing about the CFP board. I had spoken to the CFP board last year about implementing more Bitcoin only content. They said they were on board with that. And then when they actually did their board elections, they decided not to even include anyone Bitcoin related. And that was just in the wake of everything going on with FTX and, other implosions of cryptocurrency style companies that they just decided, hey, we're not going to touch this. And instead they just put out it was like a 5-pager on why advisors should educate themselves in the space, but why the CFP board is not going to help do that. So that's how I see it. I mean, it's like, how can we expect financial advisors to get proper education when all people tell them is that they need to be educated and then they don't have any resources to actually get educated? And so, and then it doesn't help also that, people can't really make money off of Bitcoin. I think it's kind of the other thing, right? You make money from holding Bitcoin. You make money, let's say, from being an exchange or for facilitating purchases of Bitcoin or helping clients custody Bitcoin in some way or another. But actually making money on Bitcoin has been generally problematic for people. And it's why we keep seeing over and over why altcoins get listed and why altcoins get issued, right? And why the media seems to cover things that are not Bitcoin. It's like because they can actually get paid off of doing these things because there are budgets for that stuff. So it's, yeah, exactly.
Marketing
Bitcoin doesn't
budgets.
exactly have a marketing budget. So it leaves us, I wouldn't call it hamstrung, right? Because obviously the Bitcoin community has expanded quite a lot in the last 15 years. It's definitely not what it was in 2008 when the white paper came out. There's plenty of people involved. It's a $400 billion asset class, right? So things have definitely changed. But it does make it harder for people to get the information that they need and to get educated in a way where they can actually reevaluate what money is and why it would be important for a client portfolio.
Yes, so well put. And I think a lot of the education is into designations that advisors don't need. And so they're trying to monetize, like come back for more versus say, hey, here's the information on Bitcoin. And Bitcoin is still evolving. I think a lot of people will say, Bitcoin's boring and all this other stuff. It's like, well, it's kind of supposed to not change all the time. That's kind of the point. So, yeah, to Morgan's point, it does make it harder to be, if I'm an AUM only advisor and I charge on the assets that I manage, how am I managing my Bitcoin position? I think that's one that people need to kind of just change the way that they're structured. And I think the financial planning community is absolutely working towards that. There's lots of places that are, going to the point where it's advice only or they're not charging an AUM. And I think honestly, my call out and my challenge, and I know none of them will watch this anyways, is all those advisors that don't want to manage AUM, Bitcoin is perfect for you and your clients. It's perfect. And it doesn't have to be Bitcoin and then nothing else, right? I don't think Morgan or I came on and said, hey, you can't buy VTI and Bitcoin. You can actually do both. Shockingly, Sam, you can do both. You can own both of these things, right? Like you can own some Bitcoin and you can own index funds, and that's okay. I would encourage maybe you do some other things too, but like you don't have to be exclusively one or the other. And I think the general take for what I see with peers is they're clueless. It's crypto and Bitcoin is inflated together and they have no idea of what the differences are. And most of the designations out there are digital assets and it's getting more confusing. They're not getting better education. They're getting more confused. And so that's something I want to work on, right? Like I have some ideas on how to fix that, but I don't want to then have a designation and try to monetize advisors to come back year after year. It's like, go get the education, go on your way, and then go spread the good word, right? Like go into the communities. Cause Sam, you're exactly right. Like you get one advisor that gets it and they go work with, call it 50 to 100 families. That is amazing. And I think that's where advisors that get Bitcoin, that's such a great place. And that's why we want to spend time there. And I know a lot of, folks on Bitcoin Twitter or just in Bitcoin in general don't like advisors, and rightfully so. They've earned the reputation of, being arrogant and not wanting to learn and just saying dumb things that have been, recycled FUD since 2017. And that's okay. But there are those that are learning and getting better. And there are more people that are reaching out, and it's going to be slow. It's grassroots. That's exactly how Bitcoin's grown, and it's the way that it should. And that's what we want. I want more of the everyday average person getting Bitcoin. I don't want nation state adoption. I don't want more, super high net worth individuals owning and stacking sats. Like I want the person that's a small business owner. And I know that's one thing that there's lots of conversations about. And I think the circular economy and small business owners and just figuring that out to me is another big passion outside of financial advisors as well.
Yeah, I would say too to like we throw financial advisors under the bus, but maybe give them like at least give the backdrop as to why this is hard for them. So for most of these advisors, right, they grew up in a Keynesian environment. They only learned about Keynesian economics. They've probably read Stephanie Kelton and some other MMT related books because that's what they were supposed to do. They need to reassure clients about the massive debt that we have, and how everything's going to be okay. And that if you look at market periods over long periods of time, that, yeah, there are windows of time where things go down and things are bad. But if you tend to hold, things will be fine. And we have evidence of that over the last 100 to 150 years of stock market indices and so forth. And so, like, I think it's unrealistic for even an advisor like me to expect that advisors who have that sort of education and who have been brought up under that sort of regime of thinking will immediately be able to change to what is money, what's Austrian economics, why is this important for my client's portfolio, how can I implement this for my client, how do I help my clients take self-custody when people haven't taken custody of funds in years now. I mean, we're talking about generations where people have not really kept money in their house. And so, yeah, I think that maybe we also just have unrealistic expectations about how quickly the advisor community is going to come around to this. For most people, what happens, right? It's like that gradually, suddenly that happens in Bitcoin is like the gradually but suddenly learning is like, okay, you get exposed to it, and you get exposed to it a bunch, and you start hearing things, and it doesn't really go away. And then somebody like Isaiah gets involved because, hey, why isn't Bitcoin dying? Why is it still around? Right. And then the next thing you know, suddenly Isaiah's down some rabbit hole and he can't get out of it. And now he's educating all of his clients. Right. And I feel like for a lot of advisors, that's going to be the track that's going to happen. It's just that it's going to take longer than, you or I want it to.
Isn't isn't it their fiduciary duty to educate themselves on this stuff? Because I think we've done a good job of reducing the learning curve over the last several years. And I know there's a lot of educational efforts that still need to happen. And that's kind of what we're doing with Swan Advisors at Swan. It's the first Bitcoin only platform for financial advisors. But part of it's a big thing's education. But when you look at the data, like our Swan CIO, Hafa Zaguri, just put out analysis yesterday called the Nakamoto portfolio. And he basically looked at different portfolios from very conservative ones to riskier ones with or without a Bitcoin allocation. And it showed that all of them benefited from a risk adjusted standpoint when Bitcoin was included. And so, how isn't it their fiduciary duty to be aware of these assets that help diversify a portfolio and provide better risk
The
adjusted
answer is
returns?
yes. And I actually just shared that tweet with our team. We have like a every other week kind of all team hands call. And so I shared that tweet and we went through it and talked about it. Cause like I'm fine to be the crazy Bitcoin guy on our team. And that's cool. Like I embrace that role. And that they get it as well. And they're learning and a lot of them have come around and are asking more questions the same way. But the answer is yes, absolutely. What the issue is, and what I challenge them on, is Bitcoin is either going to zero or it's a bubble and it's way over. Like it's either like the extreme opposites of where it is. It's never in between. And I wrote a piece recently about like, hey, if you believe in efficient markets and all these other things that a lot of advisors stress that they do, at some point you have to give merit that Bitcoin's been around. It has not died and the market is pricing at a certain level. And if you include an allocation to it and you rebalance or you do these different things, the math works. And that post, again, shows it. And so anytime that I talk with an advisor, I'm always saying, run the numbers, use math and run the numbers. And if you do that, it's really hard to say that you should have a 0% allocation.
Yeah, I totally agree. I'll play devil's advocate here, though, because why not? If you think it's a scam, then it's your fiduciary duty, right, to keep your clients away from scams. And so, what my view on that is, let's keep clients away from all these altcoins because those are scams, and I don't want clients to lose money. And Bitcoin, it should be a fundamental part of the portfolio. But for an advisor that doesn't believe in Bitcoin or any cryptocurrencies, right, then they're going to try to steer their clients 100% away from these things, and they will think that they're doing their fiduciary duty by doing so. That said, though, I totally agree with you. They haven't done their research, right? They haven't looked into it clearly enough. They should spend more time doing that before they just automatically steer their clients away. But it's not unhealthy to have a skeptical opinion about things as a financial advisor. I mean, there's so many scams out there. There are so many ways that your clients could get embroiled in something that has liquidity issues that was sold to them as being a good bill of goods that really isn't. And I think that to use the trope, Bitcoin fixes this. It does fix a lot of those things, right? I mean, there are a lot of alternative assets that are considered standard by any other advisor's, evaluation of it, but we steer clients away from because there's liquidity lockups. We don't really necessarily know what's going on in these funds. They have quarterly reporting that's well behind what's actually going on in the fund. So to me, it's like, it's so hard to tell what's actually going on in the fund. So why would you want both a liquidity lockup and also the inability to actually know what's going on, and have a significant portion of your net worth be stored in that? And so having something like Bitcoin as a way of diversifying is actually, I mean, I think great, because then it removes that alternative asset sleeve, which people typically use, which ends up being illiquid, dragging on the portfolio. Some months does really well. Other months, you have no idea what's going on or why it isn't doing well. And then same thing with fixed income, right? I mean, we have a lot of people who are quote unquote managing duration. And so people are looking at duration metric and they're saying, okay, well, I know I want to have a short duration portfolio right now because of where interest rates are, and I'm worried about interest rates, but they're holding a bunch of mortgages, and people don't understand how mortgage duration plays into their portfolio and how that shortens duration, quote unquote, when they're actually holding a 30-year asset. And so from an advisor standpoint, right, your fiduciary duty is actually to be able to evaluate all of these things all of the time. And unfortunately, right, the average advisor is probably falling short on being able to evaluate that all the time, 100%. And I'm sure I'm falling short in some way or another. So I'm not throwing everybody under the bus or saying that I'm perfect in any way. But I do think that like the fiduciary duty thing it's difficult to get around though. Absolutely. And if you are putting your client's interest first, then, there's a lot of things that need to change about the financial advisory industry, including Bitcoin in the portfolio, but also like Isaiah was mentioning, how you're charging, right? Because if you're charging it based on an AUM basis, then right away, having clients not holding Bitcoin in self-custody, right, is like you're not doing your fiduciary duty, in which case, but you won't be able to charge on those assets if you don't have it held at a custodian. So there's just a lot of different moving parts, I would say, that go into an advisor's fiduciary duty.
Yeah. No, those are some good points. One of the things that frustrated me during the bull market was the financial advisors who did do a little research, and then seemed to want to diversify into altcoins. They would say, well, we don't know Bitcoin. So they just did a little research, little Dunning-Kruger effect here, and said, hey, we're going to diversify Bitcoin, which is digital sound money, with digital penny stocks. And there was all these funds out there that had these, top 10 altcoins that give you exposure. And what do you think of that? Because I think that's a really important point to touch of why it is not diversification when you go into altcoins with a
Morgan
Bitcoin
was super
position.
toxic with this because I don't know exactly which one we're talking about, right? And I retweeted it too. But the fourth largest position was Luna. And it took quite a while for it to actually not get on there.
Exactly.
And this is supposed to be, Mr. I'm on CNBC talking all the time and putting my name behind stuff. And then I see it and I just laugh because they obviously have no idea what they're talking about. But then they write in their blogs that are read by lots of people and then bash Bitcoin on the other end when it goes down in value, but never hold themselves to account that they also launched a product that was full of scams. And two of the things that were on there are no longer even in existence, and people are getting arrested for it. Like, I mean, come on, talking about fiduciary duty, like it's a money grab. And I think that's where most of to me, that's the toxic part of it, right? Like it's not calling out the BS. The BS is like, there's no justification for why you want to own these things. And they'll just say, well, it's diversification. And it just doesn't make any sense. But
Yeah, I mean, I would say it comes back to the fundamental problem of why altcoins even exist, right? So Bitcoin prioritizes security, and simplicity, essentially, right? The code itself prioritizes the security and the uncertainty that we see in monetary networks. And so, in order to compete with Bitcoin, you have to compete on a level of innovation. And so anything that is going to be innovative is going to affect the code in a way such that security might be compromised, or uncertainty of the network might be compromised. In which case, all of these altcoins, right? If it doesn't compromise both security and the uncertainty, right, then it will be implemented in Bitcoin. I guess is what we've seen over time, is that there have been changes to the Bitcoin code that have made Bitcoin more secure and less uncertain. And so whenever I see any of these altcoins come out, they don't solve any other problems that Bitcoin doesn't already solve. And if anything, they introduce more uncertainty and more problems into the code and potentially into, centralization and how things are happening within the altcoin itself. And so the problem for financial advisors, though, is that if they don't start by studying Bitcoin and they don't start by understanding what Bitcoin's purpose actually is and what problem it actually solves, then automatically all of these other projects are going to seem really interesting. If you view Bitcoin as just some software project, right, then yeah, diversifying into other software projects is a good thing to do, because you wouldn't just hold, let's say, Amazon as a tech company. You'd want to own a bunch of different tech companies, right? You wouldn't want to just hold Google. You hold a basket of them. And so that's sort of the advisor thinking of, like, we don't put all of our eggs in one basket. But the problem is that in this specific instance, if you're not putting all of your eggs in one basket, then what you're doing is you're just diversifying into a bunch of things that don't actually fix any problems. And so that's kind of how I see it. But the problem is really more in the education standpoint, because if you just do a little bit of cursory knowledge on Bitcoin and you don't actually do a deep dive on what money is and why this would fix certain issues that already exist in your client's fiat portfolio, Bitcoin is the diversifier. Adding more diversification doesn't change, like, doesn't make it better.
Real quick, though, that challenges most advisors to have their worldview shattered, and they don't want that, because that's really hard. Think about, you've learned for years and years, you've built a really big business, you do it this way, and then all of a sudden Bitcoin comes along and says, no, it's all broken. That doesn't work, actually, Sam, no longer. And you're like, oh my gosh, what do I do? And so it's much easier to say, you know what, I have X amount of years left. If I just keep trying to like push this to the side and keep growing and doing my thing and I get out, that's someone else's problem. And I think for a lot of firms, there might be younger advisors on the team that would be interested, but they know that the career risk is not there to go push leadership to do it. And I think that's why, again, going back to the grassroots piece, you'll see smaller firms that I think are trying to think about it a different way, do a lot better. And then the other piece that Morgan talked about is with altcoins. Altcoins are test net for Bitcoin. Like, that's it, right? Go test the ideas, break all the stuff, let everyone lose their money on that, and then just bring it to Bitcoin when it's done. We can do that. That's fine.
Gotcha. Well, hopefully these financial advisors maybe learn something in this bear market. Probably the hard way, right? If they were pushing a lot of these altcoins. Usually Bitcoin gains strength in bear markets relative to altcoins, because a lot of these die on the vine and don't come back for the next bull market, but Bitcoin always does. But it is a bear market. And so I think a lot of Bitcoiners are looking around and wondering, how can they increase their income maybe to try to stack some more sats at these bargain prices? It's also never been more important for households more broadly to maximize and accumulate wealth to manage this increase in the cost of living with this high rates of inflation that a lot of people are suffering from. And so I was wondering if I could throw it out to you guys, if there's just any of these like tried and true pieces of advice when it comes to financial planning, and how these households can kind of manage these challenging times, and maybe how Bitcoiners could maybe get some more income to stack more sats.
I'll take, I don't know if it's tried and true, but I think one thing, and I think it was Bobby Schell from Voltage that put it out the other day talking about small business ownership. And I firmly believe in this. My wife and I are on this journey at the moment, so she might be getting out of education and buying a small business, but looking at the ability to, how does hyper Bitcoinization happen? In my mind, that happens if I can go and buy the goods and services that I want in my local community with Bitcoin. I'm not asking for permission. I'm just going to go out and do that. And so I think for more Bitcoiners, it's not this idea that I'm just going to stack, hodl, and never do anything else. Go out and go buy businesses, start businesses, do things, and accept Bitcoin and see the ability for that to flourish. You also get more autonomy, because I know a lot of Bitcoiners are disagreeable, like yours truly. So if you don't like the people that you work with and they have policies that you don't agree with, if you're now calling the shots, and you can go and, let's use the federal government for what it is, go get an SBA loan. Now, rates aren't as low as they were, right? But it is not insanely difficult to go out and find good businesses run by baby boomers that need to get out of business, that are willing to sell it to someone that can bring in a skill set in marketing and can give it a fresh, look, and use some technology and leverage it and grow it. And maybe you're not making, a crazy amount of money, but you can make what you make maybe now plus some, and give a lot more freedom and autonomy. And to me, that is a lot more robust than one person making the decision on whether or not you have a job based on lots of things that may, be in their prerogative for what you need to do, versus being like, hey, this is a great business. You can run it the way that you want. And so for me, I think more Bitcoiners do need to look at that. And maybe that's a good use of spending Bitcoin, which I know could be, a terrible thing to say. Maybe you should sell some Bitcoin and go buy a business to then stack more sats, because you actually have the ability for that to sat stacking machine to be there for a long time. Right. And so I think that's an interesting way to do it. And there's lots of tools that are getting better and better for you to be able to turn that on as a business. But that's the one. I know it's probably not the one you were looking for, but that's one that's top of mind for me.
No, I like that. I like that a
I
lot.
would say for those out there who are not ready for business ownership, to add to Isaiah's comments, so that not every there's not gonna it's not for everybody, right? And there's some
Totally,
challenges there too,
Oh.
and there's extra cash, fiat cash, not Bitcoin cash that you have to keep around, not BCH. I wish they did not call it that. It's just so annoying.
We're just gonna clip
said
that.
it.
Clip
It's
that
just-
part.
Morgan is now an altcoiner because
Yeah,
she's
God,
talking about
can't
Bitcoin
have
cash.
that.
Yeah, so you end up needing more of a fiat reserve, and not a Bitcoin reserve if you're going to run a business, because you've got taxes, you've got overhead. There's a bunch of things that happen in businesses, and so you actually business owners on average actually do end up keeping more fiat cash around for that exact reason. And obviously we've seen the effects of that, of like what happened with SVB and so forth. I mean, I wouldn't totally attribute that to what went on with SVB, so don't hold me accountable to that as well. But yeah, so that's just something to consider. You might not be stacking for a while if you go and buy a business. So if you are a 9 to 5 W2 desk jockey or whatever else it is that you're doing, I would just evaluate regular expenses, right? The large fixed expenses are going to be the ones that they're the hardest to change, obviously, but they're the ones that move the needle the most, right? So getting rid of your avocado toast might be a lot easier to do, but if you downsize your home or downsize your apartment or whatever else you're doing, or you get rid of your boat, or you decide not to put a pool in your backyard this year, right? That's going to help you stack sats better than if you just make coffee at home. But if those options aren't available to you, then I would just think about how you can just cut expenses somewhere between 5 and 15% on a regular basis, right? When you go to the store, you don't buy the most expensive cut of meat. I know it's really hard for Bitcoiners, right? But like maybe, look at that as an option. Or maybe your kids don't need as many toys this year. Or maybe, you sacrifice going out once a week or whatever it is that you do, right? So there are ways to stack. They're not as sexy as buying a business for sure. But it does help. And I would say that like there was something that Bitcoiners used to talk about. I'm assuming that they still do this, but literally where they would go and they would say, I was going to buy my coffee this morning, but instead of spending $3.50 on my coffee, I went on Swan and I bought $3.50 worth of Bitcoin. And I would say that's the way to go, right? You're in Target, you're about to go buy something. Instead of buying in Target, you just you go spend $100 on an app like Swan, and then you leave the store, and that's going to help you stack more sats.
Yeah. You had a tweet and I loved it. You said you have two options to build wealth: spend less than you make more than you spend. And I thought that was really simple. And then Isaiah, I loved your idea as well, because it talks about like entrepreneurship and producing value. And that's kind of the amazing part of Bitcoin. I find that in Bitcoiners, after they go down this orange pill, they do realize, okay, I need to produce more value. If I want to stack more sats, I need to produce more value. And so there's something like beautiful about entrepreneurship and then building that circular economy that we want to see in this world. And so I like both of those answers for different reasons. I thought that was fantastic. But Morgan, you said you would love to dive into some of the financial planning myths that Bitcoiners think are true. And so I have to ask you, what are those myths? And I was
Yeah,
wondering if you
sure.
could
So we did
expand on
touch on
those.
one of the myths is that you only need to own one Bitcoin and then you don't need any kind of financial plan. I mentioned earlier, that's one of them. Another one I like to hear often is the IRS won't exist, so I don't need to worry about any tax planning. I've heard that one quite a lot. You can just borrow against your Bitcoin. You don't need to worry about managing your spending or anything else like that, because it'll just be inflated away. Is another, I think, hefty myth for sure, especially if you have to manage bear market cycles. We've seen people get margin called through those. So generally not a good idea to float your personal expenses against your Bitcoin if you actually want to hold your Bitcoin for the long term. Some other ones, orange pilling spouses. She'll just get on board. She'll be thankful. She'll thank me later when I've stacked all this Bitcoin without her knowledge. Is a common one I've heard. Your wife will not think that way. I 100% doubt that she might be grateful that you have more wealth, but I 100% guarantee that she wants to do it together, not separately. And so there are just things like that that tend to come up, which I find really funny. And then, retirement planning. I mean, there's just so many, because They're like, these accounts won't exist. The IRS won't exist. I won't need to take my RMD. Why bother putting things into a Roth IRA when there's not going to be any government? One recently was I can use my Roth IRA as an emergency fund. So why aren't people just withdrawing money from their Roth IRAs? And the point is that you would spend that tax free later on. So you really don't want to be withdrawing from your Roth IRA if you don't have to. It's why there's a term emergency fund. The last one, which is I think my favorite, is I don't need a fiat emergency fund. And that couldn't be further from the truth. The best way to stack Bitcoin and hold Bitcoin for the long term is to have a fiat emergency reserve. That way, you lose your job, you get hit by a bus, some other thing happens, right? I don't know, your hot water heater breaks in your house. You don't have to sell your Bitcoin to cover those things. And you don't have to take on credit card debt either.
Gotcha.
So I would say having a fiat emergency fund is still very important, unfortunately. Sorry, Bitcoiners.
Isaiah, you got any other to add?
I was just thinking the person that is installing the new water heater, you can just get them to accept Bitcoin and just pay them in Bitcoin.
Yeah.
They're going to be there for a minute, just orange pill them, right? No, but I think Morgan's spot on, right? We joked about this. We had a call in the Bitcoin for Advisors network last week or something like that. And they were talking about, the IRS, the government's not gonna be around in like 10 or 15 years was, I think the number said. It's like, no, guys, it's gonna at least be like 20. Come on, you gotta save that extra 5 years. So
least 20 years.
It's gonna
At
be,
least 20.
yeah, it's one of those things where you have to have a foot in both worlds. Even if we all have, and I've talked about this before with other people, it's like you can almost feel like you can see the future when you kind of get Bitcoin, and it gives you, I think, some unrealistic ideas at times, right? But there are some truths that happen and you're like, oh my gosh. So everything that is said, and then you just take it a little bit too far, but you have to have a foot in each world. Even if you think there's going to be this, bright, beautiful, and I am optimistic on what Bitcoin's going to do for the United States, for the world. Like, this is amazing. Like, I think it's going to be great, but there's going to be a period of transition, and it's not just going to like all of a sudden go up tomorrow and it's just gone. Right. I think someone made the comment, and I'm trying to remember who it was, but it's like, Uber came or whatever, and taxis were still around. So like, even if, Bitcoin comes and it's going to overthrow, let's say, right, or unseat, a lot of this political power over money, it's still going to be there and it's still going to live, and they're going to have side by side for a while. So you have to, have one foot in each side of the doorway as you go through. You can't all be in one camp. So I think it's just important, as Morgan talked about, to have that. You can hold less, as your conviction grows, and I think you can hold less fiat over time, right? But you don't have to.
Okay.
You don't have to, completely forego some of the benefits of current structures like a Roth IRA. I think Bitcoin and a Roth IRA makes a ton of sense because for a lot of people, that's where they're going to continue to save into right now.
Yeah, and it's about having resiliency to kind of hold through the volatility of not just Bitcoin, but of life. You don't want to be a forced seller of the Bitcoin, and probably why you should avoid leverage as well, right? And so you brought up retirement accounts and the Roth and a typical traditional IRA. Swan just launched an IRA, so we obviously think it's important for people to hold real Bitcoin and to get those tax benefits. But why? Let people know, like, why is it so important for people to take advantage of these retirement accounts?
I can take this one, Isaiah. So there are two types of retirement accounts. There's a traditional IRA and there's a Roth IRA. With a traditional IRA, you put in pre-tax dollars and your money grows tax deferred. And then on the other side, you take distributions from that IRA and you pay income taxes on them. The Roth IRA, you take after-tax dollars, you put it into an account that grows tax-free over time. And then when you take distributions from that account, you do not pay any taxes on them. The reason why both Isaiah and I are really huge believers in Bitcoin and a Roth IRA is twofold. I would say, one, it's the time horizon aspect of it. No matter your age, unless, you're 98 and in a nursing home and, death is on your door, basically, right? Your time horizon with your Roth IRA is generally pretty long. Even if you're in your 70s, right, you can live another 20 years, in which case holding a long-term asset like Bitcoin is going to be great. And what we've seen through the cycles, and probably anyone listening to this thinks that Bitcoin is going to go to the moon, in which case you're not going to want to pay taxes on distributions from your traditional IRA later on. You're going to want to be able to remove those contributions plus earnings on a tax-free basis, which is what you can do with a Roth. And so the Roth IRA is kind of this nice vehicle because it matches time horizon really well. long-term savings with an asset that is long-term savings, and then enables you to have tax-free distributions on the other side. I would say the traditional IRA, though, it shouldn't. I don't like it as it's not my preferred way for people to hold. I would say Roth IRA, and then holding it in a personal account, just holding Bitcoin outright, not in any of these structures, is going to be your next best bet. But if you've got money in a traditional IRA, right, it's much better to have some sort of impending tax problem and own Bitcoin than it is to not own any Bitcoin at all because you're worried about what your required minimum distributions are going to be. So while it's not, my favorite place as far as asset location, I would say it's still a place that you can hold Bitcoin, right? And it's better than not holding any Bitcoin.
I
Anything to
was
add,
just going to
Andrea?
say, and this might get people throwing stuff at me, but if you own it in a Roth or a traditional IRA, and let's say you're younger, and let's say everything stays the same, which it likely won't, right? But let's say the tax laws stay the same way, you might get to the point where in the future, all of a sudden businesses run on a Bitcoin standard, and you want to invest in those businesses instead of just holding the money, right, that they're all generating. And so in those accounts, you can sell it and you have no tax ramifications and you can diversify later on. But right now, we all understand having Bitcoin is the asset to own for the future. But that might change in 20, 30, 35 years where maybe all of a sudden value investing is back, right? Something where you can actually go out and own companies again, and it makes sense. So that's one other nice thing about thinking about having Bitcoin in a Roth or a traditional. But I would agree with Morgan on
Yeah.
the Roth, the kind of the taxable or just individual account, and then the traditional IRA.
I do love it. It's kind of like forced holding too, because if they want to sell it, they would have to, they would have to withdraw it if they wanted to use it for other things, which is they'd take a penalty, right? So I think that's kind of interesting part of it. Let's kind of finish off with some current events. So obviously there's a banking crisis going on right now. And perhaps it shined a lot of risk associated with trusting these intermediaries with wealth, with all your wealth that can go under at any time. And so, have you guys been getting questions from clients about, this idea of counterparty risks? Are they more worried about having their funds tied up in these intermediaries and thinking about maybe how to diversify that risk?
Yeah, so we have not gotten a lot of questions about it, but I did put out a piece for my clients about what fractional reserve banking is. I think that most people don't
Mm.
really know why we're in the situation that we're in, because I don't think that people actually realize how much banks lend out, right? I think that people think, oh, I put my dollars there and then, banks miraculously make money. And, I don't have to worry about fees, especially at some of these large banks. And then I'll just withdraw anytime. And, the government has insurance on it and so forth. But what banks really do, right, is they take that dollar and they lend it out. And they don't have that dollar at all, and they don't even have a penny of that dollar anymore, right? They completely lend it out because they don't have any reserve requirements basically at this point. And so we've been educating clients at least on that piece of it. Of your money is not as safe as you
Mm.
think it is, but that said, the government is stepping in, and they're going to cover any losses. But I think on the other side of that is that people don't really understand what happens when the bank lends it out. So either they find people to actually lend that money to and they make some sort of spread on it, or they just have to go and invest those dollars because they haven't necessarily found all the loans that they're going to make. And so like a bank like SVB, I mean, that's basically what they were doing, right? They were just going and buying mortgages. And so they weren't even making crazy investments. They were just buying, like my mortgage, which is, a 2.5% 30-year mortgage. And it went down in value because interest rates go up, right? And so when interest rates go up, another person is paying a lot more interest on the same loan, right? In which case the bank could be making more money on that loan. So my loan is worth a lot less. In order for another bank to be able to compare it apples to apples, my loan would then be at a discount to par value, let's call it, in which case, the bank is now underwater, quote unquote. And so that's just like, it's not widely known, right? I think like in the Bitcoin macro world, we think, oh,
Yeah.
everyone knows this. This is how banking works. But the average person doesn't really know that not only banks are sort of forced to lend out their dollars, and when they're not lending them out because for whatever reason they don't have that many loans to make, that they're just going and investing in whatever else is out there, and that there are widespread implications to them doing so. And that the government has actually made it such that banks have to do this. And not only have they done that, but they've made it to the point where like they don't want to approve banks that want to keep reserves, which is crazy to me. I think that people actually would pay fees on their accounts if they knew that they didn't have to like worry about their money actually not being there when they went to go take it out of the account. And I think the other widespread implication, which we are all kind of coming to terms with now, is that there's probably only going to be 5 or 6 banks left after all this, right? Because it's all going to get
100%.
more and more centralized. And the government seems to want that, right? That's where we're headed anyways. They want to have more control, more oversight. And so why not let some of these banks fail and let the bigger banks take them over, and we'll cherry pick who we think should win in these cycles. And then we get more and more centralized. And so I think the balance though is that you have to educate clients about this without freaking them out, right? The last thing you want to do is you tell clients about this and they're totally freaked out. And not only like they don't know what to do, they're pulling their money out, they're not sure exactly like where to keep their funds at that point. We don't want to like scare clients into like causing a bank run or anything. But we also want clients to be aware of like what potentially are the risks of them keeping, certain bank accounts open.
I hope everyone caught that humble brag that
Isaiah?
Morgan just dropped on their mortgage rate there.
Oh, no.
I'm just kidding.
Yeah.
But yeah, no
Subtle
doubt.
flex.
Like, look at
Subtle
My
flex.
mortgage is awesome.
Yeah.
We're stuck in this house though. We can't go anywhere.
Yeah, she's
I
got
get it. But no, I mean, there was a couple. I think you have to be kind of pre-wired to want to question these things. And what I've noticed with clients is there's certain ones that get the Bitcoin thesis and story, and then others that they kind of are like, oh, I view it as an investment, and it's kind of more like number go up, and they think of it like a stock or some other different thing. They don't really understand, even to the best of my ability to like try to educate and inform. They still don't quite get the why. But I think what happened with SVB drove home hey, you know why we talk about that self-custody thing with Bitcoin and why it's kind of special? Boom. This is why it's special, right? And then asking the question of like, where does the money come from? The same thing, like, where does the yield come from? Like, where do these things come from? Like, just ask basic questions sometimes. And people are like, I don't know. I've never thought about that. And understanding, like, we live in a credit-based system. When my mortgage was created, where did the money come from? Right? Like, people trying to understand and just get educated on that. Bitcoiners have talked about it a lot for a long time, like the education side of things. We're just not taught a lot of this stuff. And so it takes time to learn. And there's a lot of people that have done really well financially, made a lot of money, and still don't get some of the root, like, core infrastructure, but that's by design. Right. And so I think going back to like advisors in general, there's a huge like opportunity for advisors to do amazing work by educating people on why this stuff matters. And you don't have to, like Morgan said, you don't have to be the, hair's on fire, like everything's going to zero, get Bitcoin at all costs. Like, that's not usually right going to work very well with most clients in a financial advisor relationship. Like but you build up trust and you can have honest, open conversations. But I got a couple. I mean, the interesting part is the one that was the most worried had a Chase account. I was like, I think that one will be probably fine because they're already kind of too big to fail. But it was Saturday morning. But people wanted to know, hey, what do you think about this? And ultimately, that's what an financial advisor is for. A lot of people are deferring some of these decisions because they're too darn busy at work. And so advisors, going back to the education piece, they need to be educated and informed on things. And that's their duty. And Bitcoin does, as Morgan talked about, it does fix a lot of these problems. So a little bit goes a long way. And self-custody to me was the big thing that I could point to again and again. It's been like, all right, BlockFi, Celsius, FTX, hey, SVB, this is more traditional, but it's the same story. Hey, this self-custody thing, it's kind of a unique component of this really cool asset called Bitcoin. And it's actually money, and we should probably talk about it.
Yeah. Yeah, I think, a lot of people don't understand the traditional financial system, and it's so important that they do. It's way more confusing, right? And they don't understand the risks involved. Like, you don't own anything when your savings are held at a bank. You own an IOU, and you're implicitly trusting that institution to manage its risk appropriately. And when it goes wrong, it can go really wrong. And so with Bitcoin, you can actually own your savings when you take self-custody, when you have your own private keys. You don't have to trust any institution. There is no counterparty risk. You can be your own bank. And we certainly have more inflows at Swan from clients that have started to think about this stuff. More corporations trying to manage their corporate treasuries, or high net worth individuals where they have funds above that FDIC limit. But really, everybody should kind of understand these risks. And so I think education is everything, like you guys were saying. So the last question I just want to throw out there is, like, we've seen a lot of actions in response to the banking crisis from the FDIC, the Treasury, the Federal Reserve. The Fed's balance sheet started expanding once again, and these new liquidity programs with brand new acronyms came out. How are you guys viewing the recent actions in response to the banking crises? And do you think that this is kind of the start of something like a pivot point where they start to bring liquidity back into the system? They're kind of coming in to rescue things that are failing again. Do you think this is beneficial to Bitcoin? Do you think this is more they're going to continue being hawkish, and there might be some more pain ahead for if there's a banking crisis, more disinflation?
I mean, I think that we're at a point where the Fed is doing things that are so nonsensical. I don't know how else to say this. It's literally like, okay, there's inflation from all this stuff that we had done. And so we raised interest rates. And instead of waiting, because we know from textbook cases of looking at this over and over again, that whatever we do in in monetary policy tends to take somewhere between 18 months to 2 years to take place. But because we've got elections and other things coming up, we're just going to raise rates more quickly and not wait for the results, right? I mean, basically what they should have done, right, is raise rates, wait 18 months, see what's going on, then raise rates again, right? This is sort of like a textbook, if you were looking at things from a gradual evidence-based perspective of how they should be doing things, that's what they would do. But instead, they've got elections coming up. They need to rein in inflation. Okay, we're going to start hiking more quickly than we otherwise would have because of that. And that's not obviously what they've said, but that's what's going on. And so now what we're going to do, because we're doing that, is we're going to tank these banks who have bought these loans and other things that are now underwater because of the rates that we're raising. And we're going to bail them out with money by printing money, even though we're raising rates. So it's like, okay, we're going to raise rates and then we're going to print money to get people out of this situation, and we're going to cause more inflation, and then we're going to raise rates and we're going to print money to get people. Like, it's just this never ending circle that we're in. And it seems totally nonsensical to me. But what seems obvious to me is that they're doing it so that they can pick winners in this. And so they're going to crash the real estate market. They're going to crash other parts of the market, and they're going to pick banks that are going to win in this situation so that they can centralize and take more control. I don't see how we get out of this one particularly. I don't see how we get out of it in a nice way. Janet Yellen, there was an interview of her, I think it was yesterday or a couple of days ago, where somebody asked her what percentage of GDP would be appropriate for debt to be. And she went on a whole thing about how it doesn't matter because interest rates are low. And it's like, yeah, Janet, you're right. When interest rates are low, it's not problematic, but like they're going to go up because you guys are raising interest rates. And so, like, by your own definition, we're about to enter into problematic times because we're like 110% of GDP, basically, is debt to GDP. So, yeah, I guess it is all relative to where interest rates are. But her point is like, well, we're not going to go back to 18% interest rates, but it's like, but we might if we keep doing this thing here. And so, I mean, to me, that's why, why it's more imperative now than ever that clients hold something like Bitcoin. It's like, okay, we don't really know what's going on in the system. Why wouldn't you want to opt out with even a little bit amount of money, just in case, to like opt out with some money to a known monetary policy up against, all this risk that you have in your regular day-to-day life and your fiat portfolio, with all this uncertainty about, what a small group of people are going to decide interest rates are going to be and what inflation should be.
Yeah, I just like the meme of it's quantitative easy on the left and right hand side, and in the middle, it's all of FinTwit telling me that it's not. So I don't know. I'm not going to try to, the bell curve. I'm not going to try to act like I'm on the right hand side. I'm just going to say, hey, like you're not letting free and open markets be free and open. And to Morgan's point, you're picking who wins and who loses, and you are the arsonist and the firefighter all in one. And so like the blame lies right there. And to me, it's comical that people still have confidence, because money is a confidence game. And you look at the people like Janet Yellen, and that was asked if she was a Keynesian, and she kind of was like, well, I studied Keynesian economics, right? And I was like, oh my gosh, it's so funny. But it's obvious, like the body language on Jay Powell when talking about Credit Suisse, which I know made the rounds as well. Like they're very nervous. They're having emergency meetings. Like you don't do that. You don't have emergency meetings with banking partners on weekends if things are good.
Yeah.
So like, what does it do for Bitcoin? That's the part where my crystal ball's in the shop. Like I don't know, but to Morgan's point, I know that every 10 minutes, Bitcoin's going to keep doing its thing. And I know that there's a lot of, kind of wild, crazy, some people call them insane folks that will defend the network. And I have a hell of a lot more confidence there to store my value that I've created in Bitcoin than I would at any bank, right? And so I think that's what more people are starting to wake up to, because it is a confidence game. And at the end of the day, that confidence is eroding. And you're hearing conversations, and I think a lot of it might be, they just want to make news cycles, but you hear like the Saudis and the Chinese and the Russians and like all these different things are like, hey, maybe we don't want to, just have the world run by USD. Now, I think some of the folks are starting to accelerate that maybe a little bit more than what's actually going to happen. Like that's going to be a very long-term trend. The dollar's not going to die tomorrow, just like the government's going to be around, right? So same thing. But I would agree. Morgan kind of laid it out there, but ultimately, is it good for Bitcoin?
Yeah.
Bitcoin was designed in the last great financial crisis, and it's coming to age in this one, and it's still early. And going back to the point, if you don't have leverage and you're taking self-custody, you can just kind of roll over and not have to worry, versus being like, oh man, who's my counterparty, right? Like we don't have to worry about that. And I think that's the beautiful thing.
I think it's also it's a reiteration, and we're seeing it over and over again in real time and really much more quickly than we normally get to see it, of why fractional reserve banking is dead and why it should just be put to the coffin forever. I don't think that's what's going to happen, obviously. I think that this song and dance will go on much, much longer, and that we'll see more bailouts and more finicky stuff going on with interest rates and what the government decides that they're going to do. But ultimately, we've seen it over and over again in both fiat assets and also really in the crypto world that fractional reserve banking is dead and it does not work. And so I think that the more that people's eyes are open to that, the more that this Bitcoin future that we, all three of us here, want, and who many in the community do want as well, is going to come to fruition. Because at the end of the day, I think that people in the current Keynesian markets and so forth think that you need to stimulate the economy by having some sort of debt society, and that's just simply not the case. They've just never looked at it from another perspective of how the world can be without this, continuous credit cycles that are boom and bust that we're constantly going through. And I think it'll be an interesting experiment for people going forward.
Yeah, I think Bitcoin's performance is a function of the environment it's in, right? And right now, you could say the traditional financial system is anything but stable. And part of the reason is it's fractionally reserved, and that is unstable. And that's what we're seeing again transpire over the last couple of weeks. And so Bitcoin's anti-fragile. It benefits from the other system kind of starting to fall apart because it is that alternative monetary system. And so I think that's kind of what we're seeing lately with the price action, as well as Bitcoin's long-term value proposition kind of just gets stronger as we see more fragility in the traditional financial system. So I want to thank you guys for coming on so much. This conversation kind of flew by. We covered a lot. Where can people find you if they want to learn more or follow your work or learn more about what you guys are doing at your firms?
After you, Isaiah.
I would say ID Financial on Twitter, and then I'm on Nostr, but I'm not a power user, and I don't know exactly how to have a handoff there. But yeah, the Bitcoin Financial Advisor Network. Check it out. There's lots of good content. There's folks there, and yeah, that'd be the handoff.
Yeah, I'm at Morgen with an E Rochard. I'm also on Nostr, but same thing with Isaiah. Do you want me to read out my input? I don't.
Yes.
I'm also writing a book. It's the Bitcoin Personal Finance book. You can find, if you want to get information about it, go to bitcoinpersonalfinancebook.com. Literally just collecting emails at this point to let people know updates about when it comes out. But just an FYI, I'm very pregnant, so I've been asked many, many times, when's this book coming out that you've been talking about? And I'm like, I don't know. I mean, I've got a rough outline. I've got a couple of chapters going here, but the family comes first, obviously. But yeah, please put your email in there. I'm not doing bad things with it, I promise. I'm not even requiring people's names. So yeah, feel free to check that out as well. And then yeah, like Isaiah said, please check out the Bitcoin Financial Advisors Network.
Yeah. And thanks for you guys for being financial advisors who do your homework and who are educating people on Bitcoin. It means a lot to the community. And thanks for coming on the show.
If you care about your financial future, you need to check out a couple of our offerings, including Swan IRA and Swan Private. Swan Private is our white glove concierge service where you get a trusted partner on your Bitcoin journey. We offer all kinds of education and research projects, as well as exclusive events to our Swan Private customers. Check it out today at swan.com/private. Also, Swan IRA. Swan IRA is the best way to gain exposure to real Bitcoin in a tax-advantaged account, like a traditional IRA, a Roth IRA, or rolling over your 401k. So if that interests you, check it out at swan.com/IRA today.